Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Tuesday, and we're at the 28th of May, 2024, 5:45 p.m. Central Time. I hope you had a great Memorial Day. I know I decided on Friday I'm just going to take off the weekend, and I did. So if you didn't get your weekend update, nothing wrong with you. I just walked away from it, and I'll come back to the markets now and enjoy it. So, we finished our metal report, and in the copper market, I was looking for the market to retrace back to its 18-day average of closes. If you recall, this was a market that got up near 520 a pound. It fell back into that range, and I love the action that it's doing at this point. As we look at energies, they all got a bid as the situation in the Middle East just keeps getting worse. 45 Palestinians killed over the weekend, another 29 today. Israel being condemned again because people that were killed, apparently they were in supposedly an area they were told to go to, and here's another one of those situations. It's not going to stop Israel. Israel's going to keep going until they do what they want to the Hamas, and there'll be the incursions, the fighting. The world will keep going against them until they finish up what they're going to do. That is my guess. Do I know? I'm not part of the Israel cabinet ministry or anything. When I look at the dollar, down a bit today, and currency's a mixed bag. The market that got the strongest today and into some key resistance was the British pound. But let's go back and do a little bit of talking about what we've got going on right now, and we'll come into all the charts in 1 minute. I have my Memorial Day sale going on. It's 40% off for any of my courses. That's the full new charting course. Normally $600, $360, includes the charting software, all my research with it while you're taking the course. If you're already taking some of my research, I add to it if you don't have it all. Also, if you subscribe to 1 year of my research, spiders, or the futures markets, just buy 1 year subscription, 40 off. When you go into the website and you go into the research area, make sure that there's a button there that says monthly and yearly. Slide it to the right or just give it a click. It'll go there, and all these prices will be there. So all you do is go to irapstein.com. There'll be a cursor at the top up here. Well, actually, if you move your cursor to the top, there'll be an icon. Take advantage. You only have 3 days left to take advantage of this, and then it's gone. All right. So let's go back to the charting software. You can see where prices were. And now let's take a look together at the information we have tomorrow. We get the Mortgage Bankers Association numbers at 6. We know that interest rates have stayed high, near 7% in mortgages. We'll see what that does. Redbook Group will come out with their weekly retail sales that have been running 5.5%, 6%. So they have been strong as can be recently. The Richmond Fed, the monthly manufacturing sector index, will be coming out. And so far, the indices for manufacturing that have been coming out have been in the toilet. The Federal Reserve will release their beige book, and that's of the regional economic conditions. That's important. I always plow through that. If you're a subscriber to my research, I generally send that out to you right after it comes out. And API will come out with their weekly member stockpiles data at 3:30, a day later than normal due to the holiday. And then on Wednesday, we'll get the EIA numbers on all that. All right, so let's go back to the chart action if we could, and let's go and take a look at gold. So the gold market has set back a little bit in the past couple of weeks. We got up here, as you know, into the 2420 level, and we have since set back in the marketplace. When you look at the market, you can see you got to 2454 in the June gold, to be specific, an area that was something of a double top, as it turns out, with the old high back here that was made in April, and the market has since retreated. When I put moving averages on, this is what I was looking for the market to come back to the 18-day average eventually, try to hold that ground, and then start moving up again, because I do believe inflation is going to be with us for a long time. I know the PCE index, they all come out on Friday. The market's going to be fixated on them. They're expected to show a slight cooling going down from up 0.3 to 0.2. But that's still a gain. It's a cooling gain, but it's a gain. And that means inflation is still with you. The market now has given you that one of those vertical price breaks, and now it's making a home at the 18-day average of closes. You can see how the Bollinger Band stopped the market. Remember, I teach in my Bollinger Band course, and one of the things I always pay attention to, you only stay 5% of the time over a band. That doesn't mean you can't run it to the upside. And often in futures, you don't go more than 5 days over that band. Can more happen? Yes. But when you chart, you're playing the probabilities. You're not playing for what can happen in an unusual situation. Just look at cocoa and you get an unusual situation when you saw a market almost quadruple in price in no time at all due to events in weather. Well, you don't play for those. That doesn't mean if you catch them, they're not wonderful. But if you're playing for that in the futures market, I think you're going to be hurt. When you take a look at the golds, when we look here at the slow stochastic, the market is corrected. It's already come down. It's in an area where the market is trying to now see, can it find its footing down here and turn up? Any reading under 30 is oversold. You're not quite there, but you're very close to it. When we look at the gold-silver ratio, I plot this as the difference between the two prices. Now, the highest it got up to is 90.91, which in theory means you go to your good friend in some shopping market somewhere and they have these stores. We buy gold. You've all seen them. And you take in 90.91 ounces of silver, and he's going to give you an ounce of gold. Well, it's gone from 90.91 to 73.13. So, has silver gone up in value or not? The lower this number goes, the fewer bars of silver you have to give to get an ounce of gold. Therefore, silver has been gaining with it. And as you know, I always look at where the 18-day moving average of closes is, and I apply what I teach in my full charting course. How do you figure out bias in a market? Bias is down. When we look at silver, look at how much different it looks than the gold chart. Gold came back to the 18-day average fighting a battle. This has still got a pattern of higher lows, higher highs, and the flip-flop. You and I had just talked about was gold going to get oversold. In this market, you are overbought. You do not have both numbers riding over 80. One of them is over that, but they're both over 70. That's overbought. So I see an overbought market. I was hoping the market would correct more when it lost its other embedded reading. If this high up here is taken out, it's just a failure on that theory. In the copper market, which I just did the special report on, and it's now no longer available. This is what I was looking for. This is where I thought the market can pull back, and now it gets interesting. So I will be keeping up in my subscriber video because I have my eyes on this market, and I do think this market can go back up rather sharply over time. But I'll play the chart, not what I think. In the platinum market, we made our run to the 18-day average of closes. You had lost the reading. This is what I thought the silver market would do. And it didn't. And when you lose the reading, you often make a run that you can hit the number, you get to it like you did in gold. Doesn't matter. It's in that zone. And this is that zone. And now the market has negated the correction phase that it has. The bias is up. The market's not overbought. I'm looking to see if it's going to throw out a new signal via the way I teach in my charting course. In the dollar index, the break today took out a previous low. So all the market did is we had a bear market rally. Why do I say a bear market? When you're under the 18-day average of closes, the red line, or you're over it. When you're over it, the bias is upside. And I would call corrections in it a break in a bull market. Well, this was a rally in a bear market because you've been under the 18-day average of closes. So the bias is still down. There's a lot of support here. Now, we have coming up next week, European Central Bank going to make its decision on monetary policy. Widely expected that it's going to cut rates by 25 basis points. The Bank of Canada's meeting is next week. If you looked at the swap markets at the end of the day, there was about a 65% probability of a June cut. That's not like as high as it is for the ECB, but it's still one where we can see the banks are leaning to it. I don't see us doing anything. If you saw Minneapolis Fed President Kashkari today talking, he wants to see months where the data is consistently dropping down. Plural, not a month, months. That's one vote. That's all that it is. But I think you see other members talking the same way, and I've been writing about that literally for a week and a half. So I don't see our Fed making a move anytime soon. And if there's surprises and they come out stronger, in other words, inflation is stronger than we think, that can even push you out of 2024. If they come out weaker, you need a string of them to get the Fed, I think, to finally say, we're there and we can move. Could it happen in September? It could, but any piece of data that's strong destroys that theory. You put it all together, you try to come up with a game plan, and that's what I try to do with you each morning, because at 6 in the morning, I'm recording my futures video going over 40 charts. At 9, I'm doing the Spider ETF stock video going over all those. And I know you people in that video are having a ball. That's where more of the trades, for whatever reason for the moment, have been occurring. And it's been a wild ride, to put it mildly. Futures have been more moderated. Okay, they have been swinging, as we all know, like that. But I think we're holding our own. And if you're in the pound with me, you had a pretty good day. So I think you're very happy with that. Remember, join. How do you do it? 40% off. Move your cursor right up here. You'll see the icon and give it a click. I'm Epstein. I'll see you all tomorrow. Take care.